What if I told you that you can own a piece of companies like Apple, Tesla, or any major business without being a billionaire? Not by starting a company, not by building a factory, but by buying something called a stock. Most people hear about stocks, but they never truly understand what they are. They think it's gambling, risky, or only for the rich. In this video, I'm going to break it down so simply that by the end, you'll understand exactly what a stock is. You'll learn how it works, and why it has created more millionaires than almost anything else in history. Let's start from zero. Imagine you and I start a small coffee business. It grows fast, and now we need more money to expand. Maybe open 10 more branches. Instead of taking a loan from a bank, we decide to divide our company into small pieces and sell those pieces to the public. Each small piece is called a stock, so when someone buys a stock, they are literally buying a small ownership in that company. This means if the company grows, their piece grows in value. If the company makes profits, they may receive a part of those profits. And if the company becomes huge one day, their small piece could become very valuable. That's it. That's what a stock is. A stock represents ownership. Now here's where it gets interesting. Let's say a company divides itself into 1 million pieces. If you buy 1,000 of those pieces, you now own a small percentage of that company. You're not just a customer anymore. You're not just an outsider. You are officially a shareholder. For example, when people buy shares of companies listed on stock exchanges, like the New York Stock Exchange, they become partial owners of those businesses. Even giant companies started small. Companies like Apple Inc. and Tesla Inc. once had stock prices that were extremely low compared to today. People who understood stocks early and invested wisely saw massive growth over time. Now let's clear something important. When you buy a stock, you are not buying the whole company. You are buying a fraction of it. And your money grows in two main ways. Number one, price appreciation. If you buy a stock at $10 and it grows to $20, your investment doubled. Number two, dividends. Some companies share a portion of their profits with shareholders. That payment is called a dividend. So stocks are not magic. They are ownership, growth, and profit sharing. But here's the mistake beginners make. They think stocks are a get-rich-quick system. In reality, stocks are a get-rich-slow but powerful system. The stock market moves up and down every single day. Prices rise, prices fall. News affects markets, emotions affect markets. But over long periods of time, strong businesses tend to grow. That's why understanding what you're buying is more important than just buying randomly. When you buy a stock, ask yourself, do I understand this company? Do I believe in its future? Is it making profits? Is it growing? Because when you invest in a stock, you are betting on the future of that business. Now let's simplify everything in one sentence. A stock is a small piece of ownership in a company that allows you to participate in its growth and profits. That's it. In this series, we're going to build your knowledge step by step. Today, you understood what a stock is. But tomorrow, we'll go deeper. Because understanding a stock is one thing. Understanding where stocks are bought and sold, and how the stock market actually works, is a completely different game. In the next video, Day 2, we'll break down: what is the stock market? How does it actually work? Who controls it? And how prices really move? If you're serious about learning investing from scratch, don't miss the next episode. Make sure you subscribe, turn on notifications, and comment below Day 2. So I know you're following this journey. This is Dollar Radar, and this is just the beginning of your financial education. See you tomorrow.